The S&P low is in, at least until mid-October. Today is September 14th, and we've been traveling. I would have wanted to make a video a few days ago. The market exploded off of the 11th, and that was a cycle related to 522 trading days that's been working actually upside down perfectly. And it basically says the market's going to continue to rally until middle October, possibly even later. And that also there's likely to be additional ups and downs along the way, making it a non-simple trade. We've been saying that there'd be a low on the 18th of September. We still think that. There's likely to be a high coming in on the 16th on Monday and a pullback into the Fed meetings and the announcement. It could come down into the 18th or 19th and then shoot up into the 23rd or 24th of the September. And that's going to be a potential point, which might be the fifth wave of this rally that started on September 9th. And then it should have a corrective wave from the 23rd of September down into October 3rd, which would be also a pullback. And then it goes even higher until until October 16th, or possibly even as late as November 6th. Okay, so basically it's a stair-step upward. Right at the moment we're near a top. Monday it should come in and we'll have a decline for a few days, followed by higher prices until the 23rd of September, and then a more meaningful correction, which is probably a two-wave of some sort of this rally that just started on September 9th. And then it goes down into early October. October 3rd comes up, and then later up until the 16th or later. Okay, this is a very important time period because there's an eclipse also that comes in on Tuesday the 17th, and oftentimes those things can have an effect on the market, and most likely it's going to be more bearish than one might expect. Even though everybody's thinking there's a high on the Fed meeting, it's probably going to be a low, as we initially thought. We didn't know which low was going to be lower, the 12th or the 18th. The one on the 12th came in on the 11th, and the one on the 18th is obviously going to be a higher bottom. It's probably a fourth wave on the way up into higher prices. So to put some perspective around the forecast, we were anticipating a low on the 18th of September, and we still expect it. And it looks very clear that that low on the 11th, the one on the 9th we didn't pick up on, but the main one was on the 11th anyway, that it's likely to continue to go up. The S&Ps are likely to continue to go up until at least the middle of October. However, they don't go in a straight line, and we still do expect this week, starting Monday the 16th, a minor high and a pullback into the 18th, potentially, and it could even be the 19th. And then it should shoot up into the 23rd of September, completing what ultimately is a five-wave sequence that started on the 9th, an Elliott wave sequence. And we expect a higher high than we've made, possibly retesting the July 16th high and possibly taking out that high by a little bit by the 23rd of September. However, after the 23rd until the 28th, or even as late as the 3rd of October, there should be another downdraft that is probably which is probably a two-wave decline, or a corrective wave correcting the five-wave sequence that just started from September 9th, ending September 23rd. And that could be a 30 or 40% correction on that rally. And then after that, early October, it could even be as early as the 28th of September, the market starts to go up strongly again and make a fairly significant rally up into the October 10th to 15 area time frame. And that should be a new all-time high. We may reach close to the 6,000 level by that time. And remember, we have been bullish ultimately for a number of months now, and this time frame around the election being somewhat unusual, and also this time seasonally, this time of the year, September and October often have corrective waves. We're still expecting to see additional correction after the next high, which either will come in somewhere around the 10th to the 15th of October, or possibly it will go all the way up into the election and then come down a couple of weeks after the election, and then go down again, then go up even higher after the in the early part of December into the mid-December point. So we're looking for an uptrend in the immediate until October 15 area, and ultimately a higher level potentially even by December, middle December. But along the way, the swing up into October has a potential break after the election, followed by another rally into mid-December. All right, that gives some context. Now for swing traders, the main thing to be thinking right now is how to buy dips, and to continue to do so at least until October 10 to 15. For day traders, we're looking for some weakness the next few days this week, and potentially a reversal to the upside until the 23rd. So you could be thinking in terms of buying. And then after the 23rd, another dip, which is probably a meaningful one, that should correct the whole 5-wave sequence that started September 9th. And that will end by the end of September or latest October 3rd. Okay? That's our forecast and the details thereto.